So let's go back to my PowerPoint slide. I'm not using your author's PowerPoint slide for this chapter because mine's better, right? Again, I create this when Amazon.com was about 4 years old, May 2nd, 2000. So my title, I don't know, am I confusing some people title? By my title, making money, I'm intentionally using money, very loose term, right? What's money, right? Accounting, we don't try to, not to use the money because it's so vague and ambiguous, versus just making profit. Again, profit is a very subjective word. So I'm trying to differentiate that. Making money, I'm thinking about cash. Making profit, I'm thinking about that.
Net profit?
The figure. Yeah. Did you notice that I'm using word of figure at the bottom line in income statement? What's the name of account? Net income figure. Isn't that artificial figure that we created? We meaning FASB GAAP created. Net income, the number. Versus making money, that's a real cash. Physical cash, please imagine that. So would you agree that you can operate a long time without profit, but you cannot survive one day without cash? Those who operate the business, small business, big business, there's one business, pretty big business, about 15 years ago, learned the lesson big time. That is Macy's. Federated Department Store in U.S. corporate history, Macy's has to file Chapter 11 bankruptcy. At that time, Macy's income statement looks beautiful, but they have to file bankruptcy. Guess what? Why? Because cash was not flowing. They couldn't even pay next month's payroll to Macy's employee. But income statement, we are declaring bankruptcy. Your income statement looks like you are making profit. But cash flow is another story. Yeah, what did I say earlier? Amazon.com? Their income statement looks horrible. In fact, I have that Amazon.com cash flow statement I prepared, but their cash is flourishing. Oh, you never answered my question. Why? Anybody guess? I asked this question, pushing your brain cells, whether you can come up with the answer. Any guess? Yeah, Andrew.
Well, if they see that their net profit, or if they have a net loss instead of a profit, they may not be trying to expand, so they may not be spending more money.
Yeah, so
they retain more cash. Simply.
That's right. At that time, they were expanding like a gangbuster. They are building another warehouse. In fact, Jeff Bezos, founder, said that we are creating like how many warehouses per day. They are expanding so fast. That's all they need because it's an internet corporation. So they need more cash. Cash is coming in there. You can imagine how do they get the cash from, right? Issuing bonds, issuing stock, and growing so fast. But typical corporation growing so fast, they're gonna run out of cash. But Jeff was bragging, the founder CEO, he's still the CEO, bragging that we have flourishing with the cash. The reason is, think about a little bit hint is the business model is unlike other business model. Accounts receivable, think about the accounts receivable. Amazon.com. There's no accounts receivable. They do have accounts receivable, don't get me wrong, very little. Other corporations, normal corporations, they have pretty big balance on accounts receivable. How come they don't have accounts receivable? Amazon.
Because they sell for cash or credit.
At least at that time, all the books. Customer, pay in front of your computer. Credit card is a cash. By the way, you know that Visa, Master, they pay cash to Amazon.com as soon as you put it in, right? Books. Where are the books coming from? Publishers. How much time do they have, Amazon.com, to pay for the book? Do you think they're gonna pay for the book ahead of time? No, they get the book from who? What's your name? She was here in Davis. Harry Potter. J.K. Rowling, right? She was a speaker, right? Commencement. Anyway, so Harry Potter books and all other books, right? They have 90 to 6 months to pay. Publishers are very loose. They don't have to require payment. But for a customer who buys the Harry Potter, when do I pay? Now. Even before ship. I mean, they're not going to ship the book unless I finish the process on the internet. So that's a very interesting business model. eBay, we talked about that when we talk about inventory chapter. We talked about eBay in our backyard. eBay doesn't have which account. They don't have an inventory account. Is that a good thing for cash flow?
Yeah.
That's a very good thing. How come eBay doesn't have it? Oh, how about eBay's revenue? Amazing, right? eBay's revenue is amazing. If they take the gross amount, eBay's total sale transaction amount, I'm not talking about profit, is bigger than IBM, bigger than McDonald's. Do you know that? But what's the catch? IBM, McDonald's, they are selling that they are created, right? Their own merchandise, their own inventory. eBay's case, what they selling, by the way? They selling everything under the sun, am I right? Right? They can sell.
Except they're not. They're
Yeah.
selling service.
Yeah, that's it. That's illegal, but they can sell, like long distance missile to Gaddafi. Well, I'm just not spreading the rumor, right? If they want to, right? They can sell kidneys or something, right? In fact, that was on the item. They had to take him down. That was not too long ago. It's illegal again, by the way. But do they own it? No. They are selling. Somebody else owns a bicycle. They are selling somebody else's guitar, right? They don't sell that. So that's the difference. Anyway, so that's another good thing. But I'm not talking about eBay though right now. So this PowerPoint slide, you don't have to write that down. It's available to download. So again, 3 key questions that I'd like to ask. Did you notice that now I'm making cash flow versus profit? Yeah. I feel funny and guilty as on behalf of accounting instructors in the entire world, because accounting 1A and accounting 1B to this point, what did we preach? Cash is not good. Accrual basis, guys. Accrual basis. Don't think about cash. All of a sudden, chapter 17, entire nation, any accounting professor, they said, please come back to cash. After all, cash is the king. Right? I feel a little bit funny about that, but it is true. But to be able to teach you all that accounting, debits and credit journal entry, revenue recognition, all that accrued liability, accrued expenses, you had to get that accrual concept, which is away from cash, in and out. So you understood why we had to do that, but now please focus on cash. You know that cash doesn't lie, human lies. Right? Cash is cash. So it's very straightforward. So take a look at the question. This might be not the best way to express, but if I can help you. How much cash? How much cash? This could be a good question for your real life corporation analysis too. How much cash did the profit generated? It sounds a little bit awkward, right? Profit generated, meaning your profit figure. Out of that profit figure, how much is cash is in there? That's what I'm saying. Generated for the business, and why the business cash flow different from its profit. That's a key question to understand that. Second question, where else did the business get money, again cash, during the period? Where's the cash source of cash? And what's the use? What do they do with the cash? So I'm talking about activity. It could be, for Microsoft's case, Microsoft recently, they spent $7 billion cash to buy what? Skype. Is that a good thing or bad thing? Yeah, but at least we accounting, we are letting to the world, investment community, Yeah, $7 billion went out the door of Microsoft. We're not talking about judgment call or strategic reasoning, anything. We're just simply telling them, Microsoft, where did they get the money from? Money going. So these are good questions for your own analysis for your own corporations.